The strategy is the golden strategy, which I absolutely love.
It's awesome. So, Jenny, I thank you from the bottom of my heart because you've shown me a way to truly understand Forex as well as the indices to where it, it just, I don't know, it resonated with me and it's my ride or die now. So I appreciate it.
I'm super, 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 super excited for you.
I'm dying to know, how much money did you make from our last public swing trading 4-hour experiment YouTube video? I don't care if it's demo dollars, paper trading, real money, prop firm, hedge fund. I don't care where it comes from. Tell me, how much did you make? Because I don't know exactly how much you made, but I can tell you it was some money, right? It could have been $40, $400, $40,000, $400,000. Like, the possibilities are absolutely endless. And obviously, those results are going to be individual to you, to your risk, and to your account size. So today we've got to, of course, we're going to review the trades we looked at 2 weeks ago, just to show you, hey, this is possible. It doesn't have to be perfect to be profitable, okay? So we're going to review those trades first. We're going to go over a couple of new ones, only a couple today on the agenda that I really, really love, because the other ones have some carryover still. But we'll go over that in a second. Before we go any further, of course, I have to do the disclaimer that says, everything on these calls is not for legal, financial, or investing advice. Everything we discuss is really meant to help people see that investing is a vehicle that can pay you long term, but it's 100% an individual journey, right? These videos are meant to show you that it's possible and probable if you get your rules and your risk management and just some simple things down, it's doable. But none of it is to be considered investing advice, of course, so please take it with a grain of salt. Do your own due diligence and, come and ask your questions. So I like the questions I've been seeing in the chat. I will take some consideration to some of the things you guys have mentioned. And without further ado, let's go take a look at how those trades did. Okay, so as you guys know, this is not all that fancy. So I'm going to start from the beginning. I usually do, just to say that we started this in May, so it's not even the full year. We already have predefined how we're, managing this trade in terms of stop loss, how we're protecting when we hit a 1-to-1 risk reward ratio, or at least one ATR in profit. For those of y'all who don't know about ATR, you can do 25 to 50 pips. Personally, I think ATR is going to be a lot more accurate and duplicatable down the line, but I've gotten the feedback, and I know not everyone is super, super comfortable with that just yet. So start with where you are, right? Prosper where you're planted. Let's go down. So I'm improving as we go. Obviously, we've got all the reports, the broker accounts, and all the things that kind of back this stuff up. Please take this as, it's still just a living, working document, but the accuracy is pretty on point. And of course, you can fact check it against the previous YouTube videos. They're all historically there. If you ever see a gap, well, then you can say that one was deleted, but otherwise it's the same schedule all the time. Go back and track those and say, hey, wait, how accurate was this? How did those trades play out? And take a look for yourself. So on the third, not the 13th, the third, we only looked at 3 trades. All 3 of those played out pretty well. NZD ended up consolidating for a hot minute before it gave us a perfect steamy drop to the downside. It does have a bit more room. Then, of course, we've got the 2 CAD pairs, which have popped up, a couple ATR and profit multiple times, but really are still kind of sitting in that range. So we've got our pips out of it. But to be honest, I think both of these still have more room. Overall, that's 100% win rate. That doesn't happen all the time, right? But that's over 482 pips. Now, I would be remiss if I didn't spend a couple minutes talking about this. So let's talk about what all these numbers down here mean. I'm going to try to squeeze in a little bit and squeeze over. I even went a step further and made something a little bit extra on the bottom. So bear with the screen for a second. Let's pay attention to down here. We've got over 14,000 pips. Remember, when you hear on the news them talking about points, right? That's 10 times as much in terms of what we're actually doing here. We're doing 10 times as much as those big things you hear about on the news, and we're doing it with leveraged money, which is huge potential if you think about it. But needless to say, 14,000 pips, right? Our average to win to loss ratio in terms of pips, okay, pips specifically, is about a 4.18 to 1. That's obviously phenomenal. I'm going to go a step further and kind of record what my manager is telling me, and of course the actual stop loss and whatever. I'm going to use this data right here. I've created a hidden cell to where I could actually type in, 3.25, 2.12. Obviously, it's not going to go back historically because that's a lot of work that, frankly, I don't need to do. But moving forward, we will have that. So now I'm going to go all the way down and make you guys a little dizzy. I'm infamous for that, I know. Let's see. Scroll down. Let's dismiss the bottom stuff. Okay. I got some feedback on one of the YouTube videos we recently had about, well, how does this equal this? Remember, each trade, first off, every pair is worth a different dollar amount per standard lot. US dollar pairs are typically worth $10. Oh, but wait, there's more. Not all of them, because USD Chef is technically worth, what, I think $11.11 as of today, and it fluctuates, right? Some pairs are worth $5 per standard lot size. Some pairs are worth $13 per standard lot size. And, of course, then there's silver, which is worth $50 per standard lot size. And some cryptos that are, one of them is worth $100 per standard lot size. It's complete insanity, right? So that varies from dollar to dollar to dollar. It's always going to vary. But we're talking about if you took these pips at, this is the very smallest, right, that most people can take on most of their brokers, is 10 cents a pip, which means you would have made about $1,400 if you caught these pairs this year, two 20-minute videos a month, right? $1,400 is not bad for literally a couple of hours of your time, not even the whole year. If you used a 0.01 lot size, which is worth $1 on most of these pairs on average, right? Some of them are worth a little more, some of them are worth a little bit less. We know that that's going to balance out, but these are just blanket numbers because not everyone is ready for the exacting of the risk and reward on the ATR and that kind of information. And I'm getting that feedback and I hear it. I would just pray that people know that that's going to be the step to going from that break-even trader to the profitable one, right? That's going to be the step, is learning these other things that go along with trading. Now, before I show that other goody stuff, 0.05 is worth what? $5? Am I saying that right? 0.5, okay? Right, we know what these are all worth per pip. So if you're trading whatever your broker is at, whether that's a 0.05 or a 0.5, in order to get it $5 per pip, we know that at that pip count, that's worth about $73,000 in the 3.5 hours or so we've been doing this year. 3.5 hours, that's it. And notice that's not even average. This is the standard lot size. That would make the equivalent of this stuff worth about $147,000, to give you an idea. That's obviously a big amount. That's a huge amount of dollars for this many hours. But, and I hesitate, and I'm excited, but also I'm praying people learn this. So this is with a 92% accuracy. It won't stay that high. This is probably going to come down in the 80s. It's just the law of averages, just how it's going to work out. I went a little further today. I'm going to have to expand this so we can actually see it. Let's see. I went a little further today to kind of go, since I can't tell you the dollar amount, and I can't tell you your account size, right? And I can't tell you exactly the dollar per pip for every one of those pairs because they are different, right? This pair is worth a different amount than this pair is. And they're both half odd. Odd USD and odd NZD are worth dynamically different amounts of money per pip. But what I can do is if you're risking a flat percentage, so if you risk 1% per each one of these trades, at the average, I'm actually using 3 based off of the numbers we have over here thus far. So an average of 3 to 1 risk to reward. That means on the trades we lost, you lost 1%. Fine, you lost it, it's gone, it's done. On the trades that we won, you won on average 3%, right? At the end of this, however many months this has been, your $500 account would now be equal to $1,000 approximately, right? There are fees and commissions and spreads, other variables here. But just to show you guys what this is actually worth, your account would be up 106%, not including the original 100% of the 100% of the balance, right? And the balance of your account would be at about $1,000 if you had a $500 deposit. So people who are like, how much is it going to, take for me to be able to have success at this? How much do I need to invest? What do I need? This will give you an idea. This has been since May to now, which is October, so give or take 5 months, right? We're halfway through this month, so almost exactly 5 months. On the smallest amount, if you were risking 3%, you would have approximately about $4,000. There are obviously variables that go into this, okay? So we have to take this with a grain of salt. There are different variations. But approximately, you'd have about $4,000 for about 3.5 hours of actual effort. That's about what that would equal. If you are risking 5%, which I would not recommend doing if you don't have a sizable amount of money or knowledge or some basic fundamentals in terms of the platforms and risk and the whole industry as a whole, your account would be at what? $26,000, only working with about $500. Now, obviously, my goal for this 4-hour public experiment is that people are doing this on a demo account just to say, hey, what would happen if I did this in real life? Give it a few months. It takes you 20 minutes. Give it a few months and just see on your paper trading account. If you don't have a broker, please check the link tree. All of the ones I use are in there. I am going to update it again shortly. Everything I'm doing is there. My tried and true, my long-term relationships with brokers are all there. If you don't have any of those, go download a demo account from any of them. They are all recommended for various reasons. But Let's go further. If you had $1,000 starting balance, okay, this is about what your account would be equal at the end of this 5-month period if you were only risking 1%. This is about how much would be in your account if you had $1,000 balance and you were risking 3%, you'd have about $8,000. There you go. There's your Christmas money and your trip to Europe, right? Well, depending on how big your Christmas is. If you're starting with $1,000 and you're risking 5%, which again, I don't recommend going to 5, 10 more percent. If your accuracy is not pretty darn good and you don't know what you're doing, this is high enough already. You're at $53,000 working very, very few amount of hours in a year, in 5 months. Very, very few amount of hours. That's absolutely insane. So I'm not going to read out all of these. You guys can see this for yourself. Starting with $10,000, obviously your leverage is going to be changing. Okay, the way you trade $10,000 is going to change. So we're not even going to go all the way to the $10,000. We're going to stick all the way in here. Take a look. That's $250,000 in 5 months, right? $250,000 in 5 months, risking 5% on a $5,000 account with this level of accuracy and this level of gains, with this average 3 to 1. Now again, plan on this coming down, probably somewhere in the 2s, just because that's how it's going to flow with the market. Plan on this coming down, law of averages. So since we know that, we don't have to be afraid of losses. We don't have to freak out when the things don't go our way, because we're never freaking out over a singular trade. We're looking at a basket of trades. That's all we're doing. And believe it or not, this is not even a huge basket. Okay, this is not a huge amount of data right here. This is only 39. That's it. It's not a whole bunch. To give you an idea, I'm going to go over to I'm very excited actually. I'm almost at 1 million pips, but we'll come to that another day when I'm ready for it. I'm not ready today. Soon though, soon. This year we're at 277,000 pips in our private group, in our community. So to give you an idea, notice how this average win to loss rate is about 2.35 to 1. Our accuracy is about 88%. But look at the data sample there. There's 315 trades, right? There's some pretty big losses too. Pretty big ones. That's real trading. But anyways, so that's enough of all this. Back to the 4-hour public experiment. I had to show this. So for the people in the chat who are unclear, how does this risk to reward equal this? And how does this dollars equal this? I don't get to decide that. Only you do. And I would love to hear what you guys have done in terms of some of these, even if it's paper trading. I don't care what it is. Tell me, how did you manage it? When did you get out? When did you protect? How did you overprotect? Did you re-enter some of those, which we're going to go over in a second? I would love to know, because the more that we know, the more that we can help each other, the more I can help you get onto a better path of actually maintaining those gains. But let's take a look. That is what's possible if you're having a small account. For those who asked about smaller accounts, for those who have asked about how much is this worth and how do you know what this is worth and how many pips and how many dollars, blah, blah, blah. 100% of that's subjective to how much you're risking per trade. Because if you have a $10,000 account and you're risking 1%, your gains are still going to be dynamically different if you're risking the same 1%, but you're starting on a $500 account. That's the difference between, hey, a $40,000 profit and, hey, a $40 profit, which $40 is not nothing. Don't gawk at 5% gains when we all know your banks and most of your accounts are not giving you 5%. And we know the stock market's only barely giving you 10% on average over many, many years and on a good year. So for you to be able to get 5% even in a month you're kicking Wall Street's butt. Like, you're doing your own 401k and your investments a severe just injustice by not taking a look and saying, wait, can I manage this money any better? And like actually appreciating even the minuscule couple percent of a gain. But before I stutter anymore, let's go ahead and go look at the trades. Please notice these are the 3 that we're going to be analyzing from last week. I only have 2 on the board today, and I'll go over why here in a moment. So we're coming into week 10, 12. Let's go take a look. Okay, we're back on the charts. My favorite place to be, well, most of the time. First, before I get started, I've got up, there's quite a few things that I really like the way it's setting up. But I'm not doing indices mostly on these live public trades. There's a couple cryptos as well as indices that have some really great moves coming, so definitely keep your eye on those. For those of y'all who know, you know. And now let's go take a look. So first things first, this is where we were looking to sell. We know that by the red perforated line and, of course, our marker here. So we were selling here. We brought up a great topic. Actually, I didn't. Somebody else gets the credit for this. But we brought up the conversation of traders' fatigue. Right? How long can you actually hold a trade and not just want the outcome right now? So to give you an idea, this was a lot of days in between, right? This is 7 days, so a week and a half of trading days, give or take, where we pulled down, we came back up, we gapped down, we came back up before we got this big, beautiful move to the downside. So overall, we got a beautiful move, right? 140, 139-ish pips, you know, give or take, okay? So I'm going to scroll out. I do want to mention before we clear the board on this, we still have some more room from where price is sitting. I would let it pull back up, but I would look for a second entry coming down another 75-ish pips and another 115, 111-ish pips from our low. So to give you an idea, it's about 50 pips from our low currently. Plenty of room. Let's talk about management. So how do you have the confidence to be able to sit through this? Well, if you have your stop loss at structure, or at least a couple of fractals back, this one's pretty steep, right? We talked about that on that video. It's live, it's recorded, go take a look. This fractal hadn't even formed yet, the one that I'm looking at right here. So this is the only fractal to go off of, which means this is our structure. Obviously, we never came in this range. We made a big, beautiful move to the downside. So I know some people caught this and definitely made some money. But it just shows you, when you're not checking your charts every 2.5 seconds, what's possible when you just let it be. Because again, if you're risking 1%, right, on this trade, you got your, 2-3% out of this trade. If you're checking it 5 times and you make 68 mistakes opening and closing and buying and selling and getting freaked out and closing at a barely net break even, at the end of this 7 days, not only are you mentally and emotionally exhausted, but also you're not any more profitable. You're typically break even and or negative. Just something to think about. I know traders fatigue is hard. I know holding and just letting it play out however it's going to is difficult. It takes patience and definitely some psychological strength, without a doubt. But consider this. That's why we're suggesting a paper trading account. That's why I'm suggesting come and do this on some not live money for a few solid months. Don't wait for a good couple of weeks or a bad couple of weeks. Give it a few solid months and manage comparably to how we're talking about managing. Give it an actual try and see. Because on paper trading, there's a lot less emotion involved. You don't care that the demo account is down, whatever amount of dollars and whatever. So that's this one right here. I'm going to go ahead and clear the board. So I'm going to go remove all this. We're done with this trade. Please keep in mind there's about 50 pips more from the low and another 75, 115, I think I said, after we get the pullback. But yes, I'm looking for the pullback now. Awesome. So I'm taking it off of our watch list. It is no longer highlighted. So let's go to GBP CAD. Love, hate. Let's zoom in. Here's where we were looking. We were looking for this buy. So we wicked down, of course, and we activated here. Overall, this moved 190, 200-ish pips, right? Big, beautiful move. We came back. We retested and did it again. So that's 200, another 100, depending on how you're managing. Needless to say, I think I am going to clear the board on this, so I'm not going to let it run. But I do want you guys to recognize we've got our impulse, okay? We've got our correction. We are failed to make a lower low. We did make a slightly lower low. Right? We're still staying within range. So not to say this doesn't have some spring potential to come down here and grab some liquidity before it takes off, because it's definitely probable. I do think this has a sizable amount of room to the upside. A sizable amount of room from where we're sitting now. Now, golden strategy-wise, we don't actually have an active entry, but we are sitting at the 50, and we're in a great position to be looking maybe on a smaller time frame for the potential buy-up. So it didn't make the spicy move I was looking for. It did make a spicy move, right? That's a big, beautiful engulfing candle. Then one to the downside, a second big engulfing candle. We trickled up and tickled all the way, but we haven't really had any momentum since then. No volume really pushing this anywhere since then. So we'll see how this plays out. Needless to say, this trade is done, taking it off of our watch list. So first things first, I'm going to remove all of those drawings, take it off of our watch list. It's gone. Gone, baby. Last but not least is EURUSD. Ooh, I'm so tempted on this one. So tempted. We looked for a buy. This is where we analyzed. This is where we were entering. This had no drawdown, no hesitation, no nonsense. Actually, neither did GBP CAD. But it didn't go far. It just kind of like did a 100-yard dash and came right back. So 160, whatever, ish pips. Not a bad way to be. Pushed up, came all the way back down. Same thing, the entry price. Got about another 75% of those pips again, and then a third time again. So depending on how you're analyzing and how you're capitalizing on these trade ideas, to give you an idea, 160 and let's just say 50.75, 50.75, that's a lot of pips potentially. Now again, I'm going to say the same thing I did on GBP CAD. I think this has some more room to the upside. I think it has a reasonable amount of room, even if it's just to come and grab all the way into here. That's another 111 pips from where we're currently sitting. If and when we break this level, I'm looking for that consolidation and then the takeoff, or I'm looking for us to steam to this area, pull back down, and then come all the way up here. So we'll see. I'm tempted on these public videos to do what we call carryovers because, man, look how many days this actually is. So I know it's all zoomed in, you can't see the candles, but this is 8/31, that's August 31 to September 29th. So this is basically 2 video cycles, maybe even 3, depending on how those Tuesdays fell, in between this big drop. So us cutting our buy short here isn't doing any justice for our little, showing what's possible in our spreadsheet and what have you. Just know, before we go any further, there is an active EURUSD 4-hour trade idea for the golden strategy, which is what we're using here. And we're sitting in a prime location. So if you want that extra entry, now is a great time. And then tell me how it does. Tell me how it does. Mind you, can we come down here and pick up some liquidity before we take off? Absolutely, it can happen. So if you're unwilling to afford that stop loss, don't take the trade. But that's that. Clearing the board, not doing any carryover. I might come back to that topic though, because I think that's a fair topic. We just went over 2 EURUSD trades. So the next thing I'm going to do is go over the CAD that I have in mind. I will deliberately tell you, actually let me pull it up off screen here, just to get my sneak peek. AUDCAD. I know EURUSD and GBP-CAD both still have some room. Also, NZD-CAD has some room, a decent amount of room, and a pretty good risk reward if you want the truth. But this is the one I'm going with today. I think it's the best setup overall. I am already in NZD-CAD as we speak, and I'm going to hold on to EURUSD personally. So those 2 trades I'm going to hang on to, just so we're on the same page. AUDCAD I'm taking along with this 4-hour trade advice. So here's where we're sitting. This was our golden strategy. We've broken through the 50. So all I'm going to do is I'm going to go to my markup. So I'm looking for a buy. Right now we're looking like we have a little bit of push to the downside. We've got a nice little spring to the up. Nice little spring. I'm going to keep this right here. So I'm going to go to the line chart just so we can see this. I'm going to drag this all the way to this peak. Back to candles. So notice how my vertical line is on the candle prior to the candle I'm drawing this trade idea from. So I'm looking for a buy. Now I'm going to zoom out, make these candles obnoxiously ugly. More, more, more. Oh, those fractals are treacherous. Delete those, just because they're in my way right now. Maybe. Maybe. Try that again. Got it. From where we're currently sitting, I'm going to go to the line chart just so we can see this super clearly. We're sitting right here. I am looking for price to come into this range, which is already your first 109-ish, 100-ish pips, which, mind you, is 4 ATR on the 4-hour time frame for AUDCAD. This doesn't have a huge ATR, right? It doesn't have one. So I'm looking for that first 100 pips. As we come into this range, I want to see what reaction we make. Beyond that, I'm looking to bring price up quite a bit more for the potential of that 250-ish pip move. That is not a bad trade. Figure your stop loss. Remember, I just deleted the darn fractals. Let's put them back on for a moment. So look, our most recent fractal is pretty far away, right? Our most recent is here, and I'm usually looking at 1 to 3 fractals back. So to show you what that looks like risk and reward wise, I'm going to have to keep those fractals on just so we can see. I'm going to use my handy dandy tool over here. So we said into this range on the low end. Don't be a silly head. Into this range. I'm not drawing the actual vertical lines there. And the bare minimum your stop loss is, and I always use an ATR cushion, is about a 1.3 to 1. That's not bad, right? And that's on the small side. After that, where are we looking? We're looking for price to come into here, but a 2.62 to 1 reward ratio. I'm looking to see that pretty hefty reaction, and even taking price all the way up to this low, which is going to be in this area. So that's about a 3.4 to 1. But please know this isn't going to happen in a day. Odds are this isn't going to be completed in 2 weeks is the other problem. So this is a 4-hour trade idea. It's going to take time. So know that when you're making your decisions. If 10% is too much for you to be sitting there without being mentally and emotionally exhausted, don't trade 10%. If 5% on the account that you have is too much, don't trade 5%. Trade an amount that you wouldn't mind. A gentleman in this morning's class said trade the amount that you wouldn't mind giving away today. Like if it's $5, fine. It's $5 is how much you're risking. Like only you can determine what that is. But holding this for the weeks it is necessary to hold it is a lot less stressful if you're not over leveraging and trading amounts that you would be upset having spent or lost today, right? Same concepts as investing as you should be using in your debit card spending or credit cards, right? If you're not going to be, regretting this. So that's that. I am looking for the buy on AUDCAD. I love it. I like it. And there you go. One more. Only 2 today. And the biggest reason why is because there's too many other CAD plays at play. NZD has made its major moves. We caught a boatload of that. I caught so many of those pips. It's not even funny. It's awesome, but holy cow. Like, we caught GN, we caught AN, I caught EN. Oh my, we caught just so many of those pips. It was absolute insanity. EURUSD on the other hand, so USD pairs. I love odd USD, but we just took an odd trade, so I'm not going to take this one in addition. I like GBP USD, but we're not quite ready yet, and I'm trying to stay true to form. NZD USD is not ready. USD CAD is also seemingly, unfortunately, not ready. USD Chef, just to bring up, it's worth 11.11. I like this for the longer term play, so if I did, I'd be looking for this retracement and then a potential continuation of the downside. Not ready. And of course, UJ, we know, has been heavily moved and manipulated because of the Japanese yen. We're not playing or touching with this. So for that reason, we're going to keep it rather simple today and just stick with 2. 2 is enough. You don't need to hit 10 every week. So this is our buy trade idea from the golden strategy. Remember, it's 3 conditions using indicators, right? And 3 considerations using your brain and or the knowledge and stuff that we go over. Literally, that's it. Being able to see some basic areas of interest is great, but you don't need literally anything else. And yes, you can do the same strategy on your phone for 10 pips and dip kind of concept. It will work the same on the 5 minute and the 1 minute. I mean, obviously barring the spread and the slippage aside from that factor, but you have the same concepts on the smaller time frames as you're doing on the large. Let's see. We're looking for the buy on EURUSD. Same thing I did. This fractal's a bit high. I'm going to go off of the base of that body instead. As we get this continuation, I'm looking for this bigger play buy. Let's talk about risk and reward. I'm going to zoom out, make it kind of ugly. Pull up my handy dandy tool. 1, 2, 3 fractals back. I'm going with the low. Remember, we're using a cushion. Figure you're going to get a reaction in this range, which isn't even going to be a 1-to-1. That's a 0.5 to 1. We're going to get a reaction. I'm definitely looking to clear this level. Can we guarantee that? Lord, no. Lord, no. But for us to come clear this level and to come take all this liquidity, you're still at a 1.35 to 1. Not a bad way to be, right? You're definitely going to be making reactions and decisions as you hit your ATR. In this case, it's 29 pips. If you're unfamiliar with ATR, then by all means use risk to reward. By all means use pips. I just think that using ATR and or risk to reward is going to be your best way to be knowing when and how to manage these. So there you go. And of course, last but not least, I'm looking into this range. That's already your 2 to 1. And as we zoom out some time frames, there's a huge level that's going to be substantially farther away. I'm not sure on that. I want to see how this area gets reacted to before I say I'm going to this low, which tracks. Oopsie. I want to see how we react here before we come clear this level all the way across, which is going to put us into this area of interest, as I call them. And that's your 3.6 to 1. Again, this isn't going to play out in a week. There might be some super saucy news that pushes this around. You can come down and grab some liquidity, but this is not going to play out in a week. It is the EURUSD. It could play out in 2, but this needs time. So you can feel welcome to say, hey, I'm going to take this first buy. I'm going to, protect at 1 to 1, 1.5 to 1 as I hit certain pip counts. And then as we retest the 50, I'm going to come and do it again. I'm going to come take another trade and I'm going to manage accordingly. You have tons and tons and tons of options. So make sure you choose the one that best suits you, your account size, your trading style, and just give it that fair chance. So hopefully this video is helpful, and hopefully you guys got the answers you need for the comments in the chat. If you have any other questions, feel welcome to reach out. We are checking those, and of course I will double back, and as well as my team will. Real quick before I hop off, we have just completed that $1,000 community challenge that we did within our group. So we've got one winner who's going to be winning $1,000 cash prize. That's going to be sponsored through Six Figure Trading Coach, which is myself and my team, as well as Super Easy Forex. So we need a couple of days to go over those numbers, and we're going to send that report out. As you guys know, we tried to involve the public a little bit differently this time. So a couple lucky people. I know that there's one gentleman in particular who the team is really excited about, has been super active. So first things first, I appreciate you with every ounce of me. It is not an easy feat getting people to talk up. So congratulations to you. I will announce your name. But you will also be doing a Zoom with me, one-on-one, to where we can kind of go over all of the trades you took, if you're willing and you're wanting to, all of the trades that you took along the way. And we're going to go over just a couple of tips to help you get from where you're at to where you want to go. And the winner of that challenge, publicly and privately, will have access to my private Discord community, which includes a whole host of different things that are coming to the table and I'm super, super excited about. So congratulations to everybody who participated. If you'd like to see future things that you have a good idea for, put them in the chat or direct message me on Telegram or email, and I will definitely consider it. No promises. Otherwise, I hope you guys have a beautiful Tuesday. I think happy Halloween, because the next one of these calls, I don't think I'm doing a call on Halloween. And I think that's the next date. So I don't know if I'm going to do it on Monday or the Wednesday, so we'll see. But happy Halloween, happy 2 weeks, and I will talk to you guys soon. Thanks for watching.